Welcome to Vator Box. I'm Bambi Francisco.
And I'm Ezra Roizen.
And with us this week is Lorenzo Carver. He's the CEO and founder of Liquid Scenarios, which is a company that analyzes and does research on a lot of private companies. So we have him here this week to look at Shares Post, which is one of the many companies that are emerging that's trying to make it easier for buyers and sellers of private companies to sell their shares. So let's take a look at the pitch.
Welcome to Shares Post. This is a quick overview of what we can do for sellers like you and how our process works. Shares Post delivers two enormous benefits to sellers. First, Shares Post helps you find the best buyer for your shares while letting you remain anonymous to everyone but the buyer you select. We do this by aggregating a pool of qualified, institutional, and accredited buyers for each of our companies. Buyers indicate what they'd pay for shares and review each seller's proposed price and terms. As a result, you maximize your chances of finding a buyer quickly and obtaining a fair price. Second, once you've selected your buyer, we automate the contracts and then connect you with U.S. Bank to handle the escrow and process the transaction. These resources combine to close your transaction at a fraction of the cost, time, and headache that were inherent to private company stock purchases before Shares Post.
So the pitch, the clarity of the pitch I thought was good, and I think they've definitely zeroed in on their message. They know what they're trying to do. It's not like they're fumbling around. They have a pretty clear, how exactly they get to that message is a whole different question, but the message is creating essentially liquidity in the private securities market. So I think they get that across pretty well.
Yeah, I mean, I think the pitch is very good. Realizing all the complexities in this, you know, they just have to pick the area that they're going to describe.
Right.
And the area that they choose to describe, it's, you know, I think it's most people can get a handle and say, this is something of value.
Mm-hmm. And clearly it's great timing for something like this without exits, without IPOs. And so you have a lot of these companies just stuck in wanting to sell their shares. So it's a great timing. Whether it's executed well is a different story. So, and the fact that there are a number of companies out there, Lorenzo, you and I were talking about them, Second Market, Exchange, Inside Venture, they all have different value propositions. But so maybe you could talk a little bit about the competitive landscape.
Yeah, I mean, I actually think, you know, this is kind of open territory. Mm-hmm. People have tried to do this for years for whatever reason. I mean, it's my opinion that right now is the best time to do it for a number of reasons. You know, but all these companies are taking different angles, like Inside Venture is dealing really with the institutions and the VCs and actually taking companies pretty much through the whole full-blown market IPO process, but without putting shares in the hands of retail investors. Right. Whereas what Shares Post is trying to do is make a market for people that have options, people that have common stock, to sell between shareholders, which means, you know, they can rely on different exemptions, and, you know, creates a whole different set of opportunities.
Well, certainly this industry is fraught with challenges. So, Ezra, you brought that up before.
Yeah, I mean, first off, I think that the idea is novel. So novelty is one of the things we discuss on Vator Box. So I think it's novel. I mean, there's been people who've tried to create secondary markets before, and it's definitely an area that has a checkered past of sort of successes in doing it. But their approach is very novel, and it seems like I've heard them speak at Always On and a few other places, and it seems like they have a pretty good handle on the challenges and the exemptions they're trying to use and the way they're navigating the securities laws. But you know, you have to have, first off, there's just simply the marketplace challenges, enough buyers and enough sellers to create an active market. So you got to get over that hurdle, because you got to have people who want to have, essentially own these securities, who have the capital to own these securities, and who want to own this asset class. So that's a challenge. You have a pretty large number of them. And particularly if you want to have a competitive market where prices go up, you need to have a lot of people who are bidding on things, and so you got to have activity. On the other side, just simply, you know, my guess is there's going to be a large number of issuers who are probably, the actual companies, who are going to be somewhat not too fired up about having a secondary market in their security before they're fully ready to be public. So, I mean, the reality is you are trading in securities.
Why does that change the cap? It doesn't change. Why would they be?
It's pricing their security in the aftermarket. So like the whole Facebook problem, when people were saying, well, what's the valuation of Facebook? And people were saying, well, shares are trading in this sort of secret market, the quiet market, at this price, at $1 billion, but the company's out trying to raise money at $15 billion, which is the right price. And so if you have pricing out there, pricing in and of itself can create problems for guys who want to issue more stock in the private market themselves, which is another issue. And then you just have the issuers, the issues for the sellers and buyers themselves. So you're buying a security that doesn't necessarily maybe down the line have a liquid market. So I'm buying a stock that if I own it now, I may or may not be able to trade later on. So
that's why the other guys are selling.
Yeah, that's why the other guys are selling. So there's a set of just securities issues that you have to think about. Now, at the same time, I'm a big fan of increasing liquidity in the private market, and I think we're desperately in need of solutions. So if these guys can navigate those issues, they're going to be A, hugely successful as a company, and B, do a great service to entrepreneurs and investors who want to find some liquidity.
It's interesting. It's sort of, how do you protect, there's going to be all these protections about how do you protect the buyers of these securities.
Right.
What kind of regulations are you going to have over those, the people who are buying this asset class. What about the valuations or the pricing? I mean, you look at pricing all the time.
This is great for Lorenzo's business. These guys are successful. This guy's right there at the trough.
What is really cool is that they have, what I really like is that they have these research reports, right? I mean, this is the stuff that I grew up with on Wall Street, following public companies, and now they're creating them for private companies, which is great, and it really can help you value your security. But are the securities well valued? Are they accurately valued on there?
Yeah, I mean, I think actually, kind of speaks to two issues. I mean, one, a lot of times the common stock is totally different value than what the preferred shares the VCs hold.
Sure.
And companies count on that more and more now because, the government's trying to, for the last 8 years or so, trying to extract value from those stock options.
Right.
So it's in the best interest of the company to have them valued at a low price.
Sure.
And they pay, $15,000 to $40,000 a year to have a third party do that.
Right.
So, I think that these transactions, you would think that they would have to provide some level of evidence, when people are valuing those common shares. But on the other hand, you'd really need a large transaction, in terms of a large dollar value, and the person would have to have access to information that I think it's going to be difficult for them to have access to.
Yeah, and following that point, I mean, these are highly opaque companies. I mean, you're dealing with companies that make it, they're, pathologically secretive. So they're just not going to want to disclose information that gives the average investor the ability to know what the real value is.
Well, exactly, because you were even asking if you're a seller of shares, upload the co-sale or agreement or the different terms, and how many people at a companies know what the terms, the specific terms are of their companies? They won't. So what happens if you're not able to provide that information? Is the investor going to have enough information to know whether he wants to buy or sell, buy your shares?
Yeah. So I think there's a number of challenges, simply just with the visibility and the financial reporting into companies to know what you're buying on faith. I mean, if you want to own 1,000 shares of Facebook and you really kind of don't care, then you go buy 1,000 shares of Facebook. If you want to buy 1,000 shares of Dig and you sort of don't really care, then you just go buy 1,000, and it's sort of like a fun thing to do. And you have an affinity with the product and you want to be part of it.
You really don't know. Like you said, it's really opaque. You don't know what you're buying. You have no idea what the terms are around the shares.
So you're going to need to use tools like Lorenzo's that will essentially give you... Yeah, it's great. But I mean, what Lorenzo's tool will give you is probable assumptions around valuations and liquidation preferences and all those things, and tell you, likely what a value might be for a company based on exit scenarios. And I think that's about the best you're going to do, which is not bad.
Let's move quickly into making money. How do you think this company is going to make money? Is it going to be as an investment bank, an exchange? How should it? Right now, it's basically monthly memberships of $35 a month, which I'm not quite sure I'd be. I don't really need to be.
I think it makes money on the exchange aspects. I don't think it's really an investment bank, so to speak. I think it's an exchange, and I think they can have subscriptions and maybe produce other kinds of content. I mean, coverage and so on that people will pay for.
Yeah, I mean, I think that right now, in terms of the value proposition, the site, if you use the free part of the site, it's really a heck of a deal because they have research reports from Michael Moe's company. And I mean, this is a quality of research that you haven't seen for like a decade or 15 years. I mean, when
Michael was doing them for small companies at Merrill.
Yeah, those investment banks, the first call reports, those used to be really helpful for companies. So everybody should go there just to grab that stuff.
Yeah.
But seriously, I mean, they're really great reports. But I think moving forward, I mean, it would, without talking to the company, you would think that some ways they could evolve into an investment bank, certainly, because they have the data, they have the information. Eventually, they'll have relationships with some of the companies and the people that have an interest. So, that's part of the equation.
Well, like I said, with Capital started as a place for providing liquidity for that one company, Spring Street, and then eventually went on to become an investment bank.
And I will say that the rules are navigable. People are intimidated by the securities laws, but they are in fact navigable, and you can create a product that is within the rules. And I think that's I mean, it was funny to me, just a quick side note, when I talked to my friend Eric Baker, who was one of the founders of StubHub, and I just sort of had blindly assumed that selling tickets, scalping tickets, was illegal. I said, no, actually, it's within 500 feet of the day of the venue. Besides that, you can completely have an aftermarket in tickets, and the whole world sort of missed that fact. And then you create a site and create a StubHub. So the reality is you can, in fact, get around regulations and create very cool sites. So I would say they have a good idea, and they can.
It was a great area to watch, and definitely people should be watching Vator News. And Matt Bowman is watching. Our reporter is going to be covering this secondary markets and all of these different exchanges a lot on Vator News. So anyway, Lorenzo, thank you.
Thank you.
Ezra, thank you. And hopefully we gave some insight and some advice to the guys over at Shares Post. You've been watching Vator Box. I'm Bambi Francisco. We'll see you next time on Vator News.